Imagine a world where your money works for you, effortlessly growing in the background while you focus on living your life. This dream is not just a fantasy for Wall Street insiders, it's a possibility that's open to everyone, thanks to index funds. At their core, index funds are a type of mutual fund designed to mimic the performance of a specific group of stocks known as an index. Think of an index like a playlist of songs, but instead of music, it includes a collection of stocks that represent a section of the market. For example, one of the most famous indices is the S&P 500, which includes 500 of the largest companies in the United States. By investing in an index fund that tracks this index, you effectively own a tiny piece of each company in the playlist. This allows you to diversify your investments without the headache of picking individual stocks. The reason index funds have become so popular is their simplicity and efficiency. They're like the slow cooker of the investment world. Set it, forget it, and let it do the work. Index funds typically have lower fees than actively managed funds because they require less hands-on management. They're not trying to outsmart the market, they're simply aiming to reflect it. This passive approach often leads to better long-term performance, partly because fewer fees eat away at your returns over time. To illustrate this, let's look at a practical example. Imagine Anna, a young professional who wants to start investing but feels overwhelmed by the options. She decides to invest in an index fund tied to the S&P 500. Over the years, her investment grows, and she's able to enjoy the benefits of compound interest. Anna didn't need to spend hours researching stocks or pay high fees to a financial advisor. Instead, she leveraged the historical growth of the market and let her money grow steadily over time. This hands-off approach allowed her to focus on her career and personal life while still building her financial future. This simplicity and ease of access are what make index funds attractive, especially for beginners. They offer a chance to participate in the overall growth of the stock market without requiring deep financial expertise. The strategy is straightforward: invest, hold, and let time do the heavy lifting. Many legendary investors, including Warren Buffett, have praised index funds for their effectiveness. Buffett himself has often suggested that most investors are better off putting their money in a low-cost index fund. But what does this mean for you? The takeaway is simple. You don't need to be an expert to start investing wisely. By choosing index funds, you're choosing a path that has been tested and proven to be effective. You're embracing a strategy that prioritizes long-term growth over short-term gains. This approach aligns with the philosophy that true wealth is built gradually. In a world of financial complexity and endless options, index funds offer clarity and peace of mind. They invite you to benefit from the collective success of the global economy without the stress of frequent trading or constant market analysis. So, as you consider your financial future, remember that sometimes the best choices are the simplest ones. By investing in index funds, you're not just securing a slice of the market's potential, you're also buying yourself peace of mind and the freedom to focus on what truly matters in life.